We're sure a lot of you have already heard about China's crackdowns. Actually, we're not surprised. It's a typical move for this state to be in control over almost everything. But come to think of it, why would this filthy rich country backstab its tech giant stocks? And to add more spice, will this affect SoFi? For today's video, we will be talking about all this tea in the financial space and how your beloved SoFi stock will be affected by this chaos. Is this really possible? Tune in and find out. Welcome to Wealth Gambit. On this channel, we cover the latest stock trends and research. If you like that type of content, please be sure to like and subscribe for more weekly content. And also, please note that we are not financial advisors, so please do your own due diligence. Without any further ado, let's get right into it. Halloween isn't for another month, but investors in China are already starting to get spooked. One of the big reasons why there's a huge sell-off in stocks in China is that many companies like Didi, which is basically China's Uber, are looking to get heavily penalized with massive fines. Also, the government is cracking down on China's private education sector. But wait, what does SoFi have to do with this drama? Apparently, this rising fintech company marks their first international move in Hong Kong, where magic lives. So is the fantasy really over? Is this the real life? Did you know Hong Kong was one of the first international expansions for SoFi? But why Hong Kong? When most people think about Hong Kong, they might look at some of the cool scenery, all the places to go shopping and blow all your money, and of course, Hong Kong Disneyland. What goes over a lot of people's heads though is all the wonderful tax benefits that it offers. You didn't hear this from us. It's the hood's best kept secret for a reason. If you hate paying taxes, Hong Kong is a huge tax haven. High five! What makes this very attractive is that there's 0% tax rate on all foreign sourced income. Meaning, if you own a company that is incorporated in Hong Kong and you're a non-resident and all the income is derived from outside the country, then you have no tax obligations. Also, there are no taxes charged on capital gains, interest, or dividends. Did we also mention no sales tax? Thanks to all these tax benefits, Hong Kong is one of the most preferred locations for investors. And on the flip side, for corporations, a tax rate of 8.25% or 16.5% is imposed, depending on profit generated in Hong Kong alone. On top of all this, the Hong Kong Stock Exchange is also seen as a gateway to accessing Chinese stocks and investments. Although Hong Kong's population is around 7.5 million, China's population is around 1.4 billion. As always, we are not financial advisors, and this isn't financial advice, so please do your own research. It really makes you think though, what could be SoFi's next power move? Just days after the billion-dollar acquisition, Anthony Noto, the CEO of SoFi, said, "We underwent an extensive process in considering our initial expansion into an international market, and it quickly became clear that Hong Kong, the financial capital of Asia, is ripe for innovation." Here's what Noto, the CEO of SoFi, thinks.
Our desire to go international reflects the desire of young people, new and beginning investors, to invest in U.S. markets. And so our acquisition of 8 Securities in Hong Kong was really built on the back of that secular trend that we were seeing in the U.S. Millennials and Gen Z want to invest. They need to invest if they're going to achieve financial independence. And so acquiring 8 Securities in Hong Kong focuses on a very large gateway to the Asian markets for financial services. It's a product we know that Asians want, that are millennials and Gen Z, just like those in the United States. Our product in Hong Kong will be commissionless. You can trade stocks, ETFs, also do auto investing. You can do recurring investing. And we have a whole product pipeline in Hong Kong, similar to what we've had in the US, and we've seen strong desire behind that product in the US. And it'll be our first product in Asia and our first market.
Let's give you a bit of background on a Hong Kong-based brokerage firm called 8 Securities. This leading mobile investing and robo-advisory service in Hong Kong is known for being on the same track as SoFi, with innovation as their sole destination in the long run. Being one of the first licensed fintechs to operate in Hong Kong, it also raised nearly $70 million of capital. With the acquisition of 8 Securities, SoFi Hong Kong provides this commission-free trading that gives their target market some too good to be true offerings. Yes, with SoFi, it makes things possible. Anything's possible! Members of this platform can actually have a sneak peek in the investment portfolios of the top performing members of the community, gaining outright advantages when it comes to buying, selling, and holding stocks. As you link this all together, free access to a brokerage, automated investing, and ETFs, the platform potentially becomes one of the hidden gems in the international market that chips in a mobile experience with financial advice and education. Hopping into the present, just a year after SoFi made this intriguing move, CEO Anthony Noto revealed his plans on SoFi Hong Kong during the second quarter conference this year. He commends the management and strong technology team from this segment, as the license proves its capability to double their AUM, aka assets under management of SoFi. It may be the stepping stone to expand and double, or maybe triple some earnings within Asia. And not only that, the company also expects to close deals within the Latin America market. To wrap this thing up, SoFi is a fintech trying to rise above expectations. If you have watched our previous videos, we're sure you know that we're really bullish on SoFi despite the negative energy surrounding the stock right now. But guess what? SoFi may be in the technology industry, but it's not necessarily connected to the heated crackdown in China, as it only targets unlicensed tech giants. Also keep in mind that Hong Kong and China have different rules and regulations. Anthony Noto should change his name to Amazon, because whatever he says, he f***ing delivers. What do you think about SoFi's Hong Kong move? Share your opinions in the comment section below. Best comment gets pinned. Until next time, peace.